Hello, I am Barbara Ash, Executive Vice President of the Montgomery County Chamber of Commerce and President of the Chamber's Foundation and National Director of the Veteran Institute for Procurement. On behalf of these organizations, I would like to welcome you to today's webinar. This webinar will provide information about financial tools and resources to help small businesses coping with COVID-19. The slides and audio from today's webinar will be made available on the Montgomery County Chamber of Commerce and the VIP COVID-19 resource page following this broadcast. Please submit your questions throughout today's presentation. We will try to address some of them at the end of today's webinar. However, any questions that we cannot answer live, we will answer after the broadcast as soon as they are available and share it with all of the registrants. However, before I introduce our presenter, we would like to gather a little information about the businesses participating today and ask you a few questions. And this will help our presenter shape his remarks to address your concerns and who we have participating. You should now see our first question on your screen. Do you anticipate laying off employees if you do not receive special SBA COVID-19 funding support? Please click to submit your answer now. You can now see some of the results from this quick poll. Thank you. The poll is now closed. Now, the next question, which would be quite helpful, we would like to know if receiving special SBA COVID-19 funding support would mitigate any anticipated employee layoffs. Please click to submit your answer now. Well, that is impressive. That money is needed, Antonio. Our next question is now on the screen. Please let us know how much special SBA COVID-19 funding support your business needs in the next 90 days. Thank you. Good to see those results. And lastly, last question, please let us know where your business is located. Again, thank you. And that concludes our polling for this part of the webinar. I really appreciate your feedback. And thank you for sharing that information with us. Now, it is truly an honor to have Antonio Doss, the District Director, Washington Metropolitan Area Office of the United States Small Business Administration, with us today. As a District Director, Antonio oversees the delivery of SBA small business financing products, government contracting programs, entrepreneurial coaching services in the Washington region, and he's also an instructor for the Veteran Institute for Procurement. Antonio will provide an overview of the financial tools and resources to help businesses cope with COVID-19. And now, again, it's an honor and a pleasure to introduce Antonio Doss, and I will turn today's webinar over to Antonio.
Well, good afternoon, everyone, and good morning also for some of you who may still be in the morning hours. It's a great opportunity to be able to share some information with you related to what SBA and our federal partners are really doing to help businesses like yours cope with the entire situation that's facing us with COVID-19. I'm very, very pleased also to be able to do this in partnership with our great partners at the Montgomery County Chamber of Commerce. And I welcome all the VIP graduates to the call. Many of you I've had a chance to meet and see in person, so it's good to have another opportunity to share information with you. We're going to go through a slide deck. I'm going to try to answer the questions at the end of the presentation. So if you have questions along the way, I know there's an option for sending some of those in through text on the web itself. But also, you know, if you have other questions, you want to make a note of those, and we can hit those during the Q&A period. So Amy, I'm ready to go to the first slide. One of the big things I want to make sure everybody knows is this is an entire federal government approach to trying to support the economics that are driven by the small business sector. And our administrator, Jovita Carranza, who's really relatively new on the job, she wasn't in the seat very long before all of the things started coming through related to this COVID-19 situation. She's been really aggressive on making adjustments to the way that we work and pushing us for levels of flexibility and seamlessness that we typically haven't experienced even in national or major disasters that we've had. Also, because I'm the district director for the Washington Metropolitan Area, you also, no matter where you are, I know there are a number of people, at least 23%, who are from areas outside of the DMV, as we say for short. You also have a district office in your state. We have locations in all the major market areas and in every state, and we represent all the territories as well. So we're here to support you in our entirety as a SBA district office team. All right, we are ready for the next slide. So this afternoon, I want to share with you a couple of key points, and I'm going to talk about loan deferrals, economic injury disaster loans, because that's still a big option for a lot of our borrowers. And then I'll share with you what I can related to the COVID-19 protection program that came through related to the recently passed CARES Act, Coronavirus Aid, Relief, and Economic Security Act, and particularly the Paycheck Protection Program. Now, the Paycheck Protection Program and a lot of the elements that relate to that are really brand spanking new. The House and Senate passed these measures last week. The president signed them into law on Friday. And feverishly, my colleagues at the SBA, particularly in our Office of Capital Access, have been working literally round the clock, trying to pull together all the necessary guidance and information to not only inform our bank and lending partners, but to make the general public and the small business community aware of how these programs are structured and how they're working and will work. A lot of that information is still being finalized, and it hasn't been produced and shared at a point where I can get into some of the details. Undoubtedly, you'll have questions I won't be able to answer. I'll answer whatever I can to the best of my ability, but there will probably be, I'm sure, some questions that I'll have to defer until we get additional guidance. Lastly, I want to just make sure we touch base on some of our other support, and we will certainly cover that area as well as we move on to slide 4. Loan deferments are one of the kind of secret options that's available that I think a lot of businesses haven't really considered because normally it's not an option unless you're really, really in dire straits. And I want to talk just a minute about this because the kind of situations that are facing small business owners in this unprecedented situation that we have are such that it's going to be difficult to expect one solution to be the only solution you need. And so in a lot of cases, we have an opportunity to kind of pull together multiple elements of support and tools to help you get there. So one of the key things that's available right now is loan deferments. And something, I'm going to use this word unprecedented. I was telling Barbara Ash earlier that I've used the word unprecedented more in the last few weeks than I think I probably ever have in any one similar period of time. The federal banking regulatory agencies, so the Federal Reserve, the Office of the Comptroller of the Currency, the FDIC, the National Credit Union Administration, and state banking regulatory agencies all came together and issued a joint statement to the financial banking community. And what they said in this is they want the financial community, the bankers, to make every opportunity available to support the business community during this particular crisis that we're in right now. And I've never seen them issue such a statement. In particular, they went in to describe how, as a financial institution, they can make loan deferments, they can do what are considered to be loan modifications, which would give you the ability to have additional cash flow. Normally, if that is the case, if the bank is going to extend your payment structure and rescope it such that you're not making payments for a couple months, there's a really good chance that that loan will be considered on a non-accrual basis. And as such, when they're in that situation, those loans become considered to be bad debt for the bank, and the bank has to write those off, and it's bad for their earnings. So when that happens, it's a thing that banks don't want to do. What the federal regulators said is, we are not going to treat you and those loans as bad loans, bad debt, because of the nature of this particular situation. So they actually encourage banks to do loan modifications. And on the next slide, you'll see exactly some of the ways that can materialize for you. For example, if you have an existing SBA loan, we had already made a decision that we were going to actually do loan deferrals of up to 6 months for any loan payment that you have. So if you're already repaying a 7A or a 504 loan with us, or even a micro loan, visit with your banker, your lender, and explain to them that because of the COVID situation, you want to defer your loan. What that can do is, instead of making, say, $1,000 payment, if that's what your payment is, for those period of time, again, up to 6 months, you're not having to make that payment. If you don't have to make that payment, that's money you can use back in your business. Similarly, I know some of you are probably from areas where you may have had to get a disaster assistance loan because of the nature of a tornado or hurricane or something that may have come through your area. We're automatically deferring all of those payments through December of December of 2019, I should say 2020. For non-SBA loans, you still have the exact same option to go and visit with your lender to get the loan deferred. And that's, again, another way to kind of help you get through the crunch, even while you're maybe waiting for an official loan that comes through some of the programs that we're going to discuss this morning. Again, we'll move on to slide 6 and then slide 7. So I want to talk about the economic injury disaster loan first. These loans These are loans that we do with some frequency when we have disasters, but most of our disaster assistance loans are really related to physical disaster. So it's unusual for us to have a national disaster that relates to economic injury. It's the first time I've ever seen us have such a situation. And for businesses who are interested, here are the basic criteria in terms of who's eligible. So small businesses, many of you are familiar with the size standard and are likely well within that size standard, so you're going to be eligible. We also extend this opportunity to nonprofit organizations. So if you are familiar with or work with a nonprofit that may be in need of support, there's an opportunity for the nonprofits to also get access to these funds. We'll go on to slide 8. There are some entities that aren't eligible. Primarily, they're churches and religious organizations, certain charitable organizations that are really more like a foundation type of an organization, and then gambling concerns. On to page 9. Under this program, the SBA can grant up to $2 million in loans to an individual borrower. And I want to share just a little bit about how the funding for this will be working and is working right now. Our goal is to push as many dollars out as quick as we can to any of the borrowers who are in need of this funding. And so we have what we call a two-phase approach. Phase 1 is a streamlined version of it, where basically we're going to say, let's look at your financial statements, what your gross income is for the past year. So that's your total income minus your selling expenses, so to speak. This is your top level profit margin. This is not your net profit. So this is the top level profit margin that you would have. So you're looking at total revenue minus your gross operating expenses or your selling expenses. And what we're doing is making the loan amount based on 6 months of that number. So if your gross profit, well, let's just say your annual revenue is $1 million and your gross expenses are $300,000, then your gross profit would be $700,000. And then beyond that, you'd have other regular operating expenses that would get you down to ultimately your net income number. So we're doing that because we can quickly make a loan determination of an amount and quickly get money to the borrowers. If that amount of money is insufficient, businesses can come back again for a second request and ask for additional money. If it's too much and somebody may say, you know what, I really don't need that much money, I could take a third of that amount, you can let us know and we'll adjust your amount accordingly. The interest rates are 3.75 and 2.75 for businesses that are for profit. It's the 3.75 and the lower 2.75 for nonprofits. These are fixed rates. The terms on these go out 30 years. If you are in business for any particular amount of time and you've ever asked for a working capital loan to cover your short-term expenses, you probably never heard a lender or banker say, we can finance that over 30 years. It's usually a really, really short period of time, a year or so less, most often. So you're automatically going to get really small payments if you go this route. Plus, our administrator has made a determination that we're not going to require anybody to make a payment on this loan for the entire first year that they have the loan. So if you get a loan, let's say on May 1st, 2019, you won't have a loan due, payment due until May 1st, 2020. So it's not a grant. You do have to repay it. Interest does accrue during that first year, but you don't have to worry about making a payment during that amount of time. And hopefully you'll be in a position to repay most of that money pretty early after your business gets back up and we get to something closer to a more normalized operating environment. We'll go on to slide 9. So these funds are really just for working capital. That's primarily, we're talking about payroll, we're talking about your fixed debts that you may have, your accounts payable, all the utilities and other things that is required to keep your business afloat on a day-to-day basis. That's what the purpose of these funds are for. They're not for business expansion. They're not for buying new equipment. They're not for acquisition of another business or anything of that sort. It's literally the government is trying to say, let's put some money in your pocket right now to help you through this period that we're dealing with, that's right in front of us right now. And on slide 11, we'll continue. In terms of the approval criteria, we are looking at credit history because we do have to have that responsibility. Ultimately, we are a institution that is funded by the federal government and funded by taxpayer dollars. So we do have to make sure we're being prudent as much as we can, but I know we're being aggressive also to try to make sure our reach is deep and that we're not in a situation where we're unable to approve loans for borrowers. We look at your repayment ability because we're a cash flow based lender. So we're focused on that as our primary tool to determine your ability to repay. We're not looking at what your income is right now, these months in 2020, because these are anomaly months and they're not representative of your normal historic ability. For that, we look back at your most recent financial statements, which are part of which we review in order to make a loan determination. Okay, Amy, we're ready to go to the next slide. From a collateral perspective, just know this, if your loans, two major points on this slide, if your loan is $25,000 or less, it's completely unsecured. If it gets more than $25,000, SBA does take a collateral position on business assets and such. However, we're not using this as a primary determinant to make your loan decision a yes or a no. So you will not hear SBA say, we could have approved this loan if you had better collateral or if you had more collateral. That's not how we're doing the loans, but we do actually take the collateral position. On to slide 13, please. Now, I want to point out one of the things that's very different with this particular loan. Normally, if you've got an SBA loan before, in most cases, you've gone through a financial institution, a lender, a bank, someone of that nature. These loans are not the same as our typical 7A and 504 loans. These loans are made directly by SBA. Treasury's given us money so that we can make these loans without any intermediary. Your process is that you go online at sba.gov to request the funds. And we have done some work to update our loan application processes and our website because we really were kind of getting overrun with the volume of applications and inquiries that were coming through, because this is literally the first time, if I mentioned this before, I'm going to mention it one more time. It's literally the first time we've ever had a national situation where we had an economic injury disaster loan for the entire country. So we're in uncharted waters here, and we've done a number of things to make our processing more effective. And I have to say, hats off to my colleagues in the agency who have deployed agile techniques and been actively making adjustments as the days go by to make sure we can provide the best service. So I'm proud to be associated with the teammates that we have in the agency. On slide 14, please. If you're in the application process and you have questions, there's a lot of different ways you can get support. The primary and best support location is through our customer service center, and the number is on the screen. If for some reason you're listening by the phone, I'll say what the number is, 800-659-2955. And so that's a place you can reach out for support. We also have an email address, disaster customer service, all one word, at sba.gov. And then between our agency resource partners and our district offices, we can also assist. So there's a lot of different points of entry where we can help you through the process. And we're ready for the next slide, Amy. So I want to now switch gears and touch base on the CARES Act, the Paycheck Protection Program. And I want to make a couple things that are pretty clear right away. One is that these are not direct loans from SBA. So the last example with the economic injury disaster loans, or sometimes we call those EIDL. So those economic injury disaster loans are direct from SBA to the borrower. These loans are processed through our bank partners and financial institution partners. So we're actually providing a guarantee to those lenders. And guess what? We're providing a 100% loan guarantee. I've never seen us have a 100% loan guarantee before. Our typical loan guarantee ranges between 50 and for certain international trade loans up to 90%. So again, the government has said we want banks to make these loans. We're encouraging the banks to make these loans. We're giving them a guarantee percentage of 100%. These loans will be provided by our lenders as well as our new lenders that we're going to be bringing on. There's a lot of interest from banks and financial institutions and others who typically haven't been so involved in our SBA programs, but have a great interest in being here to help support the business owners through this challenging time period. So we will be upgrading and updating our list of lenders to make it available to you and so that you can be able to get the support that you need. In terms of a process perspective, we always recommend you start with your current bank, your current lender, because they know you and hopefully they know you very well, and you've built a relationship. And so that's your first port of entry. But we will have other means of connecting you with financial institutions and lenders if your relationship with the bank that you currently have is not the one you want to pursue for this particular situation. Also, please know that normally we do have loan fees, like origination fees associated with our loans. There are none for this particular program. And next slide, please. And you can advance one more. So a couple of key points about this program. The loan amounts go up to $10 million. I'm sure some of you would love to get $10 million. Hope you really need it. The interest rate, again, this is another major thing, 0.5% interest rate. So a 0.5% is the interest rate on these loans. And to be eligible for this program, you need to be either sole proprietorship or business, including those that are sole proprietors, self-employed individuals with independent contractors, again, nonprofits, veterans organizations, and tribal concerns. We've done something to somewhat simplify the eligibility standard on these. So we're saying 500 or fewer employees. And there are some exceptions where some of the industries we're going to actually use SBA size standards. But by and large, the vast majority of all borrowers, if you have 500 or fewer employees, you're good to go. You're eligible for this particular program. Now, this program, not only does it have 100% loan guarantee, super low interest rate, but it also has a loan forgiveness component to it. And so the idea here that our colleagues in the Congress and in the White House wanted to do was to encourage you to maintain your employee base. And I know every one of you wants to maintain your employee base. You worked hard to get those folks on board. They know how you work. You know, you've got relationships. A lot of times it either is literally a family member or it feels a lot like family when it comes time to taking care of your folks who are under your employ. And so the idea is let's encourage you to continue to use whatever monies you have to keep people on the payroll. And this particular program, as long as you're using your funding for payroll costs, you have the ability to have some of that money forgiven, some of those loan dollars forgiven. The threshold is at 75%. So if you're spending 75% or more of these funds to cover payroll costs, then you have the ability to actually come back and get a loan forgiveness for that amount of money that you spent. And there'll be more specifics on exactly how that calculation works and how the process works. But the key to know right now is if you take these dollars, use them for payroll, you may not have much to worry about repaying. The loan maturity is at 2 years. By the way, there's no collateral required. And again, there's another thing I've never seen is during my time as a banker and otherwise, no personal guarantees. So you're not required to sign a personal guarantee form. There's no collateral involved, and there are no loan fees that you're responsible for. Additionally, this is not on the slide, but sometimes there are people who are entrepreneurial at times when it's not so great to be entrepreneurial. So if you have calls or people reaching out to you to say, hey, I can help you get your loan reviewed and processed, and I can help you with your application and all those kind of things, and I'm going to charge you X number of dollars, think very, 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 very long and hard about taking that course of action, because this thing is set up to be simple, clean, and easy. And anybody who can tell you that they have a way to get your application in and approved quicker is telling you things that are not necessarily going to be accurate. Let's see, do I have one more slide here or on the next slide? Okay, before I get into entrepreneurial mentoring and support, I also want to make a point to say that as part of the CARES Act, there is the ability to get $10,000 as an advance on your loan. So whether you're going through the economic injury disaster loans or you're going through the Paycheck Protection Program, you have the ability to, at the end of your application for the EIDL loans, economic injury disaster loans, actually check a box, which will give you the ability to say, yes, I'm interested in getting $10,000. And with that box being checked, they're going to ask you for certain information related to your bank account, your routing numbers and such. And with that information, they will then be able to push forward a communication through the Treasury Department that will allow you to get the funding of $10,000 as an advance pretty quick. And we're anticipating that that's going to be something that will be done in just a few short days. Last pieces I really want to touch on, and then we'll be ready for the Q&A portion, is deals with our resource partners. It's probably back one more slide, I'm sorry. As I mentioned earlier, as you're going through this process, you may have some challenges with some of the application information, or maybe pulling together some of the financial things, or maybe just kind of talking through how do you go about adjusting for the new environment that we're all in right now. SBA has tremendous resource partner support through our network of entrepreneurial assistance service centers. SCORE is a big program that we have. They're a national program. They've got online support, and they've got experts in a lot of different areas. We also have the Small Business Development Center network with close to 1,000 locations across the country. I'm sure there's one very close to where you are. And then lastly, our women's business centers. A lot of our focus and attention right now is on how do I get money into my business. I think this particular pandemic is making a lot of people rethink, how do I do my business? What adjustments should I make? What lessons am I learning from this? And one of the things that our resource partners can do is help you strategize not only how do you get through today's situation, but how do you position yourself maybe a little bit different as you come out of this, hopefully in a couple short months. And so these are all these information on here is the phone numbers are relative to the locations in our Washington metropolitan area, but the website links can get you to any of our locations across the country. And now I think we're down to just a slide or two left. In addition to those resources, there's a listing of other ways that you can reach out to get additional information about what we're doing with COVID-19 and our support to help you with that. Some of these information is also available in other languages, including Spanish. So you'll see the reference points there. And I think at this point, we're ready for questions. Is that the last slide? Yes, so thank you for listening and look forward to trying to respond to the questions that you may have.
Well, thank you, Antonio, and we'll see how many we can get through during this webinar time. And again, I just wanted to remind everyone that today's slides and audio will be made available on our website, on the Chamber's website as well as the VIP website following today's presentation. And any questions that we don't get to, we will certainly get answers to them and send them out to all of today's registrants. So if you're ready, Antonio, we'll get started with some of the questions that are coming up. One of them is, if you apply for an economic injury disaster loan, does that preclude you from applying for and obtaining a PPP loan?
Excellent question, because now you have a choice, and that's something in this country, you can have a choice of ways you can get support. That's a really good thing. So you can apply for both. The catch is just what purpose will you be using some of the funds for? So if you're really focused on, the payroll part of it, it might behoove you to go the payroll protection program, or excuse me, the Paycheck Protection Program route because of the forgivable nature of it. If you've got additional expenses, other kind of working capital related items that you're also looking at, maybe you've got some suppliers that you've got to repay for things that you've ordered and such of those natures, then the other option, the economic injury disaster loan, may be able to assist you more. But there's nothing that prevents you from applying for both of these. Similarly, if there's funding that's available, I know some of the states, some of the counties, not taking a request for the exact same purpose.
Thank you, Antonio. Here's another one along those lines. How about, is it possible for the business owner to get an express bridge loan in addition to a economic injury disaster loan and a PPP loan?
Yes, that is a possibility. And if you have the ability to take advantage of that, even before you get access to the other dollars, by all means do so.
Okay, great. And how long would it take to get a response to an application for an economic injury disaster loan? What are you seeing for to be processed until you get money in hand? What are you seeing?
So here's what we're anticipating, and we're still pretty early in the process. So these numbers are, I have to put a big caveat on all of them because there's a lot of uncertainty in terms of volume of application, staff level support, and other things that are going on. We've taken a number of steps to increase the quickness by which we can make a loan decision. So our original estimate was 18 to 21 days to get the loan approved, and then maybe another week or so after that to get funding. So I haven't been able to get a firm number in terms of what our actual turnaround time has been and how it might adjust, because I'm sure it will adjust now that we have a second option along the way, not just the economic injury now, but also the Paycheck Protection Program loans.
Okay, great. Thank you. Here's a question. The SBA website includes references to debt relief for existing and new 7A loans and indicates that SBA will pay principal and interest. How does that work, and does that relief have to be repaid?
Yeah, so that's probably referring to two things, the loan deferral, which I mentioned earlier, and I know some people may have joined in a little bit late and didn't hear that part. If you've got an existing SBA loan, we are deferring those loans. You can go to your lender who originated the loan and ask for deferment. We can do that up to 6 months. In terms of paying the principal and interest, that may be reflecting more on how we're going to do the payments related to the Paycheck Protection Program. I might want to start saying triple P or PPP. It's a little tongue twister for me right about now. Because one of the things that's going to happen with that is we're going to also defer the payments for 6 months is what I believe the term is on that as well. And I apologize, I didn't have that on the slide deck.
Okay.
So that's an additional level of support that the agency is providing. And again, there'll be more information coming out on that with better details as we look at the full listing of Q&A items and more specifics on some of the process of things.
Okay. Thank you. Here's one. I have a business line of credit with a local bank, but I'm concerned that if it will not be enough to get us through this crisis, would my company be eligible for an economic injury disaster loan or any grants? Will it affect my line of credit?
Yes, first question is yes, you would be eligible. In terms of affecting your line of credit, I don't know that it would be. I mean, I know there are some cases where there are certain covenants and such that a bank may have related to your credit line. But again, going back to the reference I made earlier about what the Office of the Comptroller of the Currency and FDIC and all the regulators have said, I don't anticipate that would be an issue for your business because the tone has been set from the top of the federal government in terms of how we regulate financing, that we want to do whatever we possibly can do to support borrowers through our lending programs.
That's great. Can the money that we get from the PPP or from economic injury disaster be used to support retraining skills when we bring folks back, given the new economy?
I would think that it would be because that's an expense that you're going to have. It's probably not one that you're going to get to have the ability necessarily to do the loan forgiveness part of it. But it's an excellent question because there are going to be some things people are going to need to do differently. And that is one of the things is retraining people on how to do those things differently. So I haven't seen where retraining is a part of the forgivable expenses. So at this point, I would say probably not, but that doesn't mean you couldn't still use our economic injury disaster loans to help you be able to retool on that perspective.
Okay, good. That is a good question. On the economic injury loan, has a $10,000 advance. Is that amount forgivable?
That amount could be forgivable if it also coincides with the Paycheck Protection Program. I'm not 100% sure right now how it applies in terms of its forgivableness with the economic injury disaster loans. However, I do want to add one other piece. Some people have already applied for these loans. They may have not gotten an answer yet, or in some cases, they may have gotten an answer that they were declined. It really doesn't matter what happened with your application. You can still go back in and submit a request to get the extra, to get the $10,000 advance amount. So even if you've been declined, you can go back in and seek those dollars.
Good.
And I'm sorry, I don't have a better firm answer on the forgivable nature of that.
Okay, we can circle back with you on that. That'd be great. On the PPP, it states that forgiveness is when the loan is due, which states 2 years. Forgiveness is reduced proportionally by the personnel or salary reduced. By what time frame? The 8-week time frame after the loan is issued, or for the full 2 years?
Yeah, it's really focused on the 8 weeks. So again, the idea is let's keep people on the payroll 8 weeks, roughly 2 months worth of time frame. And so the thought is if we can keep the economy moving, we can keep people employed, not have people having to spend all their time, your employees spending all their time going to their creditors and to their landlords and to everybody trying to get some kind of workout situation or fighting back, the processes that are stalled right now and on hold, including, evictions and foreclosures and things. But we realize there's a lot of people that are literally living paycheck to paycheck, and being able to have that 8-week period of certainty where they can get paid is really what's driving a lot of this right now.
Okay, good. Here's a question going back to, you mentioned earlier on the collateral. Can you explain more about that? What type of assets or equity are you looking for in the business? What would be typical? And I know that you have become more flexible with that as well.
Yeah, so we typically for these loans we'll take a filing position on any of the assets. So that could be just a blanket lien on business assets. It could be a lien on real estate, any asset that you might have. It could be, marketable securities if you're in that situation as well. It's called an advance, and I'm not comfortable characterizing it as a grant. It may become a grant based on the forgivable nature of it, but more details will be needed to through an official Q&A to really answer that one.
Okay. Do any of these programs apply to real estate agents?
Yes, if they're a sole proprietor, that whole list of businesses that we showed on the one slide earlier, we're trying to get to everybody, people in the gig economy, people who are, literally they're kind of on their own. They are their business. We are trying to make these dollars available to everybody.
Okay, great. Here's a question of somebody who reached out to their local bank for to let them know about they wanted a PPP loan guarantee, and they asked to be considered for that SBA loan, and they said that, well, you don't need it. Is there an advantage to SBA's loan or a way to insist on an SBA loan so we don't have to pay the fees involved for a loan?
Oh, absolutely. Your banker may have not, because again, this is all so new, the likelihood that all the information is gotten everywhere where it needs to be is somewhat slim at this point. So it's all pretty fresh and new, and the banker may not have all the information about this loan. But the intent of the government, of Congress and the White House, is to make these dollars available to those who need it. And so if you've got a banker who's not willing to let you use these dollars because they want to let you only use the ones with the loan fees, then consider your options, because you can go someplace else and get those dollars.
Oh, good advice. Thank you. Here's a question. It says here forgiveness of the loan, and this is the PPP loan, is partially based on utilities, including transportation. And the question is, what is transportation? What does that include?
I don't know if I can answer that one, Barbara.
Okay. Well, we can certainly circle back on that. Are corporations eligible for the PPP funding?
Corporations are, as long as they are small, according to the standards that we have there. 500 or less employees. A lot of small businesses are corporations, and some will do sole proprietors, some will do LLCs, some will do partnerships. But yes, if the entity has 500 or fewer employees, then they're going to be eligible.
Regarding, again, the PPP program, the question is, our lender is an existing SBA approved 7A lender. They indicate that they are waiting for SBA to issue regulations that are supposed to be issued within 25 days. Do you know what they are referring to and when?
Yeah, most likely what they're referring to is the CARES Act, which was signed into law last Friday. And so they're waiting for guidance, regulations, updates to our standard operating agreements or standard operating procedures, SOPs. We don't anticipate
Do we know when
it being 25
those
days.
regulations will be issued? So, it says
We are pushing for those things like nobody's business. There's literally, like I said before, there's folks working around the clock on those. I know they're trying to get as much out as quick as possible. I haven't got a date certain yet, but I know that the intent is to get it out at least within 14 days of the bill signing. So between this Friday and next Friday, I would anticipate us getting pretty close to having those that information and guidance available. And I should say also, for the people who aren't involved in the public rulemaking process and how we do our procedures and how we take and interpret federal law and convert it into something that the general public can pick up on, it's never done this quick. I mean, these are usually many weeks and months, and sometimes almost a year before regulations will get out. So the speed at which we're working at is, again, here's that word, unprecedented to get this done. And there's a heavy push on for that to happen. So as soon as it's absolutely possible, it will be out. No one's delaying that intentionally. I guarantee you that.
Yeah. So you gave yourself, within those 25 days, but what I'm hearing is that it is likely to be sooner than that.
Yes, that is the objective. Okay. Very much so.
And so you're working to that objective. Okay, good to hear. This has come up a few times in today's webinar's questions. Can a church or a religious primary school get the PPP funding? Can they apply?
So I believe that there is a provision that allows that in the PPP program. Again, my hesitancy is that I haven't seen specifically what that means and how it works. But those guidance documents that we were just speaking of a second ago, that's where that's going to help spell out some of the particulars to it. So at this point, I'm modestly hopeful that that's the case. I just haven't seen it firmly in writing. And one of the things I'm always really careful of, and I don't like it to happen at all, is for misinformation to become the information. And so if I'm a little bit hesitant and not giving a straight answer on a couple things or deferring, it's because I don't want bad information to be considered to be the official information answer. And then before you know it, it just kind of gets out of hand. And so I'm cautious in that regard.
Sure. Well, I appreciate that. And again, we will get all of these questions to you, Antonio, so that you can follow up on those that need further, clarification or you need to forward to someone on your team. So yeah. I don't want to think that we're not going to try to get that answer. We just may not know it today.
Yes.
Great. Here's a question, and it's a good one, I think. What if you get what if I get the loan out of caution? The PPP loan I apply and I don't need it. Is there any penalty?
No one's coming looking for you. If you, okay. And it may not be a bad strategy because right now, one of the other words I've been using so much lately is uncertainty. There's just so much that we don't know, and it's very difficult to predict. Prudent behavior is a good thing at this point. So if you have the ability to position yourself for success, even if it's just something that you don't end up needing, you can always repay it early. There's not a prepayment penalty. But
okay,
it's a safer option.
Yeah. Here's a question from a restaurant owner, and your employees receive an hourly wage plus gratuities. How much will a PPP loan cover for that kind of employee?
Yeah, there's specific language that I did see related to gratuity. I don't have exactly how that relates, but I know that was a consideration in the framing of this particular legislation. So again, that's one of those ones that'll get spelled out in detail. But I know there has been a lot of thought placed on that already.
Okay, good. Oh, if you're an owner of a company, but you don't take payroll, but take draws every quarter, would that qualify as payroll?
Yeah, I think that there is a way that does apply in this particular situation, because it's ultimately it may not be classified as a salary, but it functions as that way in terms of a draw. So I think that's one that will be appropriate as a use for this. Again, I'm sounding like a broken record, but when the guidance comes out, we'll pay attention especially to that piece of it.
Okay. Here's a question that someone would like some clarification, that the PPP loan has an interest rate up to 4% with a maturity of 10 years. Is this no longer correct? He was referring to, it was a 0.5%. Is he referring to some other loan at 4% maturity, 10 years?
Well, anything you've seen about the PPP program before a week ago is irrelevant, because the law only passed last Friday. And the guidance that we provided literally just yesterday, we started providing information on it, is that the loan has an interest rate of 0.5%. Now, sometimes some of these SBA loan programs can get confused, one to the other, but for the Paycheck Protection Program,
you needed to, get some clarification for to you as well. And again, we will collect those responses and get them out to everybody who registered today, answers to those questions. I wanted to thank Antonio Doss for providing this great information, for the work that SBA is doing. I used the word precedented earlier, and I know you used it 3 or 4 times, Antonio. And so this is quite an effort, and we appreciate that. You did mention at the beginning of the program that everybody has an SBA district office that they can reach out to. Of course, Antonio is the director for the greater Washington area here, but please reach out to your SBA office for help. And of course, in the slides, you got some helpful resources as well. I want to remind everyone that today's presentation will be made available, the audio and the slides, on both the Chamber website and the VIP website. That is mcccmd.com and nationalvip.org. I want to thank all of our participants for attending today's webinar, and again, thank SBA for making this possible. We wish you continued good health. Wish you good health and success, and in the coming months, we will get through this all together. Again, thank you, and we'll be keeping in touch.